Hello dear students, in this video I am going to explain you about the important theory questions which may come in Advanced Financial Accounting second semester BCom as per NEP syllabus. And this Advanced Financial Accounting subject is having 5 different chapters like insurance claims for loss of stock, hire purchase accounting, departmental accounting, branch accounting and conversion of single entry into double entry system. So in this video just I am going to explain you about the theory questions. So some chapters like where will be having for 2 marks and even for 5 marks and 12 marks, and some chapters will be having only for 2 marks, that is section A and section B. So let us move on to the video. So we have first one, insurance claims for loss of stock. Here in this particular chapter you may expect 2 marks questions like this. What is insurance? So that you should write the meaning of insurance. And next it comes to who is insurer. Means normally the company or the institution which provides insurance policy to the needy one. And who is insured? The person who is taking insurance policy from insurance institution or insurance companies, will call them as insured. And what is the formula for calculating gross profit? So gross profit will be normally calculated, and it is also called as rate of gross profit. The formula is like this, where rate of gross profit is equal to gross profit divided by sales into 100, especially net sales into 100. So this may ask for 2 marks. Then next question we have average clause. What is the meaning of average clause? So even therefore this particular thing, average clause, you may have the calculations where they may give some content, and they may ask you to prepare or to calculate average clause, or they may ask you when the average clause can be applicable. Normally the average clause will be applicable when we can call it as if the information is given in the problem related to insurance policy, then we will consider. Normally average clause refers to the clause included in the insurance agreement for the purpose of discouraging under insurance of stock or any other asset. Especially for some problems they will give insurance policy amount, which means for how much amount the products are insured or the goods are insured, and sometimes they will not give. If they have given, then you need to calculate the average clause. This they may ask you for 2 marks. Then next one we have something like what are abnormal goods in insurance claim. There are certain goods which cannot be considered, or which we may consider as goods which cannot be transferred, so that we can call it as abnormal goods. And last one, what is a formula to calculate the amount of claim? Normally the amount of claim will be calculated in 2 different ways. One is when the policy amount is given and when the policy amount is not given. So when the policy amount is given, we will calculate amount of claim by using the formula policy amount into actual loss of stock divided by stock on trade of fire. Or else if they have not given any insurance policy value or any average clause value, then we should consider whatever the actual loss which happened to the company will be the actual amount of claim. So in this particular chapter, 5 marks questions, you can expect only one question, that is about explain the steps which are involved in calculating the claim for loss of stock. So there are 5 different steps which normally we follow to calculate the amount of claim or claim for loss of stock. So the first step is preparation of trading account to know the gross profit. Then we will prepare ascertainment of gross profit ratio. So we will calculate the gross profit ratio. Then third step, we will prepare preparation of memorandum trading account. Especially we will prepare this memorandum trading account to know the stock on the date of fire. So when the fire is occurred and when we lost the goods by fire accident, till that particular date or time, what was the stock which was available in the company. So to know that, we will prepare memorandum trading account. Then the fourth one, ascertainment of actual amount of loss. So actual amount of loss, again we can consider by using a particular format, which will be like, we'll take the closing stock or the stock on date of fire. In that we will deduct salvage value of goods or scrap value, and if any expenses which are incurred to extinguish the fire, so that should be added, and by calculating this will identify the actual amount of loss. And in the last step, as I already told you in 2 marks question, the claim amount can be calculated in 2 different ways. One is when the policy amount is given and when the policy amount is not given. When the policy amount is not given, actual loss which we calculate in step 4 will become the actual amount of claim or claim amount. But when it comes to policy amount which they gave in the problem, at that time you have to calculate by using formula amount of claim is equal to policy amount into actual loss of stock divided by stock on the date of fire. So stock on date of fire we will calculate in step 3, that is by preparing memorandum trading account. And in this particular chapter there won't be any questions which will come for section C. So second chapter is all about hire purchase accounting. So hire purchase accounting, again you will be having questions like 2 marks questions and again 5 marks questions, and there will be few questions which you may expect for section C. So the first question, they may ask you what is the meaning of lease. Lease, again it is a contract between 2 parties where one party is providing asset to another party to use the asset. The person who receives the asset or using the asset will pay a certain amount to the owner of the asset. So they may ask you what is the meaning of lease. Again state the essentials of a lease contract. Then we can say what is hire purchase system. Normally hire purchase system, it refers to a system where the seller of the goods will deliver the goods to the buyer without transferring the ownership of the goods. Normally he will just transfer the goods. The ownership of the goods will not transfer until and unless the last installment is to be paid, or till the date of executing the contract, the ownership will not transfer from the seller to the buyer or the person who is taking asset for the usage under hire purchase system. Then next one, state essential features of hire purchase system. Any 2 they may ask. There are so many features, around 6 to 7 features are there. You may explain any 2 or you can write any 2, where the first one we can say first feature of hire purchase system is it is an agreement between 2 parties. Who are those 2 parties? We can say hire vendor and hire purchaser. Hire vendor is a person who provides the asset and hire purchaser is a person who uses the asset. And second one we can say essential features, where this is an agreement which provides 2 parties will be involved in that, which I already told you, and where one person is a seller, where another person is a buyer. And another essential feature we can say the payment which made by hire purchaser to hire vendor will be always in installments. It is not at a time. Then one more I can add to this essential features. The one more feature is in case of transaction which results in hire purchase, will calculate payment which happens to price of goods and payment which happens in terms of interest. So we'll pay interest and the principal amount of particular product which we purchase on hire purchase. Then fifth one, bring out any 2 differences between sale and hire purchase system. Both are having 2 different natures, where this one again there is this question they may ask you even for section C type, where explain in detail the difference between sale and hire purchase. There are around 8 differences between sale and hire purchase. So when it comes to 5 marks I will explain you, but here I can tell you in sale there will be the buyer pays only for the price of goods, but in hire purchase the buyer will pay principal amount and even interest also. This you can use it as an essential feature, and you can write for state any 2 essential features of hire purchase system, that is previous question. And second difference I can say the between sale and hire purchase, In sale the ownership will be transferred, but in hire purchase the ownership will not be transferred till the time the complete installment are to be paid. The next one is, who is hire purchaser? I already told you, hire purchaser is a person who purchases the goods on installments. Then who is a hire vendor? Again, hire vendor is a person who sells the product. Who sells the product on hire purchase system will be called as, or the person who provides the goods or assets to hire purchaser is called as hire vendor. And next question is about what is cash price. It refers to the price at which the goods are sold under contract of sale. This is the most expected question where they asked many times in the previous question papers. There are still more 2 marks questions. Under that, the first one, what is hire purchase price? So hire purchase price is a price which includes the price of the goods plus interest. Price of the goods plus interest. And what is installment? Installment is an amount which will be paid periodically by the hire purchaser to hire vendor based on the contract. So installment can be for 4 years or 5 years or 10 years. It is based on the contract of hire purchase, which means the amount will be paid in particular period for several period. Maybe 10,000, for example, if I am purchasing any product for 10,000 rupees, and if I want to make a payment in 5 different months, in the sense 10,000 divided by 5 months, we can say 2,000 per month. Or I am going to pay amount of 2,000 every month for 5 months, means totally I am going to pay 10,000 for purchasing the goods on hire purchase system. Next is about down payment. It is also called as deposit. What is deposit or down payment? So it is a amount or a sum assured which is paid by the hire purchaser to hire vendor when they are entering into the agreement. It is an initial deposit or initial payment made by the hire purchaser to hire vendor. Next, what is the meaning of net cash price? So net cash price, it's a actual difference, or it refers to the difference between cash price of the goods and the deposit. We can call it is an amount on which interest is calculated under hire purchase system. Actually, the interest will be calculated on this only net cash purchase, which means if the goods are purchased for 10,000 and I paid down payment of 2,000, means this 10,000 minus 2,000, the remaining 8,000 is called as net cash price. Next, explain the meaning of net hire purchase price. So net hire purchase price, which includes or it is called as, where we will add 3 type of things under this, where delivery charges of the goods, registration charges and insurance charges. Including this, where we will deduct from the hire purchase price. So hire purchase price minus delivery charges, registration charges and insurance charges. Again, delivery charges, registration charges and insurance charges, if any, if it is applicable, then you should consider. Then hire purchase agreement. Every time we see about agreement, it will come according to certain laws. So under the hire purchase agreement, so a hire purchase agreement comes under the Hire Purchase Act 1972. So what is the meaning of hire purchase? See, according to section 2C of Hire Purchase Act 1972, it is an agreement in which the goods are let or hire, and under which the hirer has an option to purchase them in accordance with the terms of the agreement, and includes an agreement under which we can say the property or the possession of the goods is delivered by the owner to another person to a condition that the amount can be paid in periodical installment. In simple words, you remember, hire purchase agreement is an agreement between 2 parties where one party is agreed to give the goods in possession to other, and another person is ready to make the payment to the hire vendor in installments or periodical installments. So this is called hire purchase agreement. Then we have state any 2 rights of hire purchaser. Again, when it comes to rights of hire purchaser, he can use the goods till the time of the possession of the goods or according to the agreement, and another one we can say hire purchaser can enjoy the benefit of all the assets till the time of the goods taken for the agreement. And what are the two rights of an hire vendor? Hire vendor can enjoy the possession, or we can say the ownership of the goods till the time the hire purchaser pays the amount. And another one, suppose in case hire purchaser fails to pay the complete installment, hire vendor is having all the rights to take back the possession of the goods from hire purchaser to hire vendor. So next we have 5 marks questions. So 5 marks questions, there will be too many possibilities which can be asked under this, where distinguish the difference between leasing and hire purchase, and they may ask what are the types of lease which are required to when a person goes for leasing agreement. Then explain in detail the features of hire purchase system. I already told you when I was explaining for 2 marks in the previous slide. So bring out the difference between sale and hire purchase. So I told you there are 8 difference between sale and hire purchase. So you can refer certain links which I am going to give you in the description box for the images which will be having the details about difference between sale and hire purchase and difference between hire purchase and installment system. Then next is about explain the provisions of hire purchase agreement relating to hire purchase charge. So here again we can follow, or we can have so many benefits, or there are provisions which are available in terms of calculating, or in terms of preparing, or in terms of entering into hire purchase agreement. So those provisions to be identified. We can say it should have the provision of legal consideration, it should have time constraint, there should be some deposit, or we can say it is like initial investment, so and so on. So the next one is about state the provisions of Hire Purchase Act of 1972 related to hire purchase agreement. Again there are certain provisions which will be like, we can say there should be even we can say that informations which are required for hire purchase accounting, like date of purchase and down payment, and date under when the installment is going to be due, date of closure of account, what will be the total cash price, amount of each installment, rate of interest, date of depreciation, and so on. So this will be provided in the description box as I already told you. And the last question, bring out the difference between agreement to sell and hire purchase agreement. So agreement to sell and hire purchase agreement also will be having 5 differences, where first difference is one, agreement to sell is regulated by Sale of Goods Act, but hire purchase agreement is coming under Hire Purchase Act. Second difference is, in goods of sale the agreement to sell will conveyance of the goods may take place subsequently, but in hire purchase agreement conveyance is immediately transferred, by ownership only remains with the seller. The third difference between agreement to sell and hire purchase agreement is, in this case the buyer can sell or pledge the goods in case of sale, because he will be already having the ownership of the goods, but it is not possible in hire purchase agreement. And in agreement to sell, in this case the buyer can take advantage of implied conditions and warrants under Act, but it is not possible in the case of hire purchase agreement. And the last difference, in agreement to sell, it is a step to contract of sale, where they can enter into a contract of sale, but here it is under hire purchase agreement, it becomes a sale only after the payment is made in full. That is, after the payment of final installment only they can come to know about that the goods are transferred, and the sale can happen only after fulfilling all the installments with interest. This is about fifth question. Next we have departmental accounting. So departmental accounting, you won't get much theory questions in this particular type of chapter. In this particular chapter you won't get much theory question, you will be having more practicals only. So certain thing you may expect is like only 2 questions, that is what do you mean by inter-department transfer. So inter-department transfer, we can say it refers to selling of goods by one department to another department, where when the company is having different departments like A, B, C, D, it can transfer the goods within the company from one department to another department. So if any transfer which happens, either it may be buying or selling. So if it is if it comes in one department, if it is selling, automatically in another department it comes as buying. And mention the basis of apportionment of expenses. So there are so many expenses which will come in the departments or in the company, and it should be equally or it should be allocated on the basis of the ratios which are being given in the problem. Sometimes some expenses which will not be possible to allocate on the basis of ratio or equally. So at that time, on what basis we are supposed to appropriate or divide? Here in this particular image you can identify. So in the first column it gives information about items of indirect expenditure and basis of the same, but how you can divide. So discount allowed should be divided on the basis of ratio of net sales of department. Suppose department A is having 10,000, department B is having 20,000, means the ratio is 1:2. And discount allowed should be divided between A and B in the ratio of 1:2, which means how I got this 1:2, I got this 1:2 based on the sales. So on the basis of sales ratio I should divide discount allowed. Selling commission, again it is on net sales. Sales tax also on net sales. Carriage outwards also on net sales. Traveling salesman salary and commission also net sales. After sales service also on net sales. Advertisements also on net sales or on the basis of the ratio of advertising space. Bad debts also on the ratio of net sales. Reserve for bad debts also on ratio of net sales, and so on. This particular image can help you to know how the expenses can be appropriated between the different departments. This is for indirect expenses. This is for direct expenses. So direct expenses which will come in trading account, where freight, carriage will be always calculated on purchases, because freight charges and carriage charges will be paid on the goods which we import or purchase. Then import duty, octroi, again it is which is on purchases, will be paid on net purchases. Power charges, where we use this power when we producing the goods, so it comes on the basis of the ratio of meter reading of each department or ratio of floor space occupied by each department, whichever is in practical. So or whichever is in practice also you can consider. Then water charges, ratio on meter reading of each department. Then income, items of income, there are certain other items which are income, not expenses. So discount received, always we will receive the discount when we are purchasing the goods. So if we are purchasing, when we will purchase the goods, raw materials. So if we are purchasing any goods, on that if we receive any discount, it's an income to us. Where in the place of, for example, I am purchasing 10,000 worth rupees goods, and the shop owner has given a discount of 10%, which means instead of paying 10,000 I have to pay only 9,000. So 1,000 is an income to me, which I have saved. So that comes to discount received, which will be entered in the profit and loss account credit side. And commission earned on sales. So again commission which is earned on sales, as the name directly says, it should be on sales, net sales. And last one, reserve for discount on creditors. So reserve for discount on debtors will calculate on sales, but here reserve for discount on creditors we will calculate on net purchases. This is about unit 3. So unit 4 we have branches. So branch accounting. So branch accounting, where when the company is having more than one branch, we'll call head office and branch office. So when it is having its business in too many branches, when it wants to calculate its benefit or profit in the branch, they can follow the accounting which comes under branch accounting. And branch accounting chapter is very important when it comes to theory, because there are certain more chances of asking theory questions. So first question is, give two features of dependent branches. So dependent branches means, here again I'll tell you, if we have any company, it will be having too many branches. Where the head office is located, we'll call it as head office or head branch, and the branches which are there, we can call it as subsidiaries, where the subsidiaries has to wait for the conditions or the rules and regulations which will be imposed by the head office. And here the features of dependent branch, we can say what will be called as dependent branch. So dependent branches refers to the branches which are under control of head office for its administration. So for any actions which they want to take, in the sense it should be taken by only from head office. And the features, we can say dependent branches where the goods are supplied from head office and those goods should be sold by the branch office, dependent branches. And again, dependent branches will not be having any right to purchase the goods directly from outside. So they have to get only, or they have to sell the goods only which comes from head office. And another difference I can say, like head office can supply the goods either at cost price or invoice price, and branch has to sell on what condition the head office sells. Suppose head office sells at cost price, the branch has to sell at cost price only. If the head office sells at invoice price, again the branch has to sell at invoice price only. So this is another feature of dependent branches. The next we have loading. What do I mean by loading? Loading is a process which happens when the goods are sent from one head office to another branch offices. Then we have what is the significance of stock reserve ratio. So we will call even it as SRR. Stock reserve ratio will be calculated to know the operation or the usage of stock effectively or not. If we have any effective calculation or effective utilization of stock, in the sense, then by using the stock reserve ratio we can identify. Then mention two objectives of branch accounting. So objectives, there are so many branches, why we are preparing branch accounting. To know the profit and loss of each branch, we are preparing branch accounting. To know the financial position of each branch separately, we are preparing branch accounting. To know the exact goods required for various branches, we are preparing branch accounting, and so on. And next one, why are the goods sent by the head office to the branches at invoice price? Sometimes the goods will be sent from head office to branch office in invoice price. As I already told you, the goods can be sent in two different ways. One is cost price and another one is invoice price. Invoice price means it is the final price where they have to sell at for the further sales will happen only on this particular price, where it includes already the profit. Then next we have what is a stock reserve account. So it is I already told you, stock reserve account. Stock reserve account will be maintained by the company to know the opening stock, closing stock, and how much stock which is being sent from one person to one head office to another head office. So it is very much required to know the exact stock of goods which are sent exactly to the head offices. Next we have distinguish between cost price and loaded price. Cost price is a price at which the goods are sent. To sell the goods, where normally we can call it as the goods which are sent under cost price will come in such a way that the goods, at what rate it is being produced, the cost of production will be considered, and on the basis of that the goods will be sent from head office to branch office for selling. And loaded price is another name for invoice price, or even we can call it as inflated price. And here inflated price or loaded price is a price which is always adjusted to know the selling price or adjusted price, which will be always above the cost price. Suppose cost price is 10 rupee, in the sense the loaded price will be 11 rupees or 12 rupees, and it will be used to, or it will be sent by head office, will send the goods from head office to branch office under loaded price to match with the inflation. This is what you should know. And whenever the head office wants to maintain the goods confidentially, they will create a price which comes under loaded price, which will be added with profit margin. So in another word, we can say it is a price where the head office send the goods from head office to branch office, which is above the cost price. You can write the cost which is above the cost, price which is above the cost price is called as loaded price. And again, in branch accounting, you will not get any questions for section B or section C. And unit 5, it's a major chapter which includes theory questions, where so the first question comes under what do I mean by single entry system. So single entry system, we can say, where it is a system of accounting from incomplete records. So incomplete, or the accounting system which does not follow double entry system of accounting principle, will call it as single entry system. And mention any 4 advantages and disadvantages of single entry system. So again, advantages are very few. We can say it is very economical, and it is very simple and easy to maintain, and it is suitable only for sole trading, and it is best suitable for sole trading and small partnership firms. And disadvantages are many, that's why a single entry system are converted into double entry system. So advantages are very few, as I told you already. Disadvantages are many. So the first disadvantage is there is no arithmetical accuracy, and under single entry system we won't find any profit and loss account, and it is very difficult to ascertain the financial position of the company. And single entry system gives place, or it encourages for fraud, and rectification of errors is very difficult in single entry system, and comparison of financial details of one company to another company, or the same company for different period, is also very difficult under single entry system. And under single entry system, the statistics or the details which I require to take major decisions will not be available completely. So it is not best suited, or it will not give complete business statistics. Then it is always very difficult to fix the value of the assets which are used under the business under single entry system, and it is very difficult to obtain banking loan from banks. Then it is very difficult to determine the taxable income, because under single entry system we will not prepare profit and loss account. And few more, it is very difficult to settle financial disputes if anything happens between between company and the financial institutions, or within the company. And last one, if any information which is required to clarify the doubt, which will not be available from single entry system. And next is about what is net worth method. So for calculating or for converting profit and loss under single entry system, we have 2 methods. One is net worth method and conversion method. So net worth method is a method where we will prepare certain accounts, where we will prepare regular trading and profit and loss account, where we will accept nominal account. So we will not consider much nominal account, and we will not consider some adjustments. And conversion method, it's pure advanced method, we can say, where we'll follow to the next question, what is conversion method. So under conversion method, we'll prepare the account in such a way that we'll find missing information, then we will prepare final account. So to know the missing information, we'll prepare opening statement of affairs to know the capital. we'll prepare bills receivable account, we'll prepare debtors account, we'll prepare bills payable account, we'll prepare creditors account, and we'll prepare cash book. So then if it is required in case, we'll prepare memorandum trading account also. For each and every account, it is prepared to know some here and there some of the missing information. For example, if I am preparing the total debtors account, I can prepare total debtors account to know 4 different information. First one is either to know the credit sales or to know the opening balance of debtors, closing balance of debtors, or the amount which I received from the debtors in that particular period. So for each and every account, so conversion method is the most frequently used method. Next, mention any 4 objectives of conversion. There are so many objectives. The first one, under conversion method, we can find correct profit by preparing memorandum trading account. And second objective is we can find true and fair financial position of the business, and we can make accounting ideal and reliable, and we can measure accuracy of accounting records, because when I am converting, automatically I am following a double entry system of bookkeeping. Then there is another thing where there are 3 types of single entry system: pure single entry system, simple single entry system, and quasi single entry system. Pure single entry system is one under which we will maintain only personal accounts. For example, debtors account and creditors account. We will not maintain any subsidiary books. Simple single entry system is a system where under which we will prepare personal accounts and cash book. We won't prepare any subsidiary books. Finally, quasi single entry system. Quasi single entry system of bookkeeping is a system where under which, in addition to personal account and cash account, we will prepare subsidiary books, where quasi single entry system is the best system where we will call to convert single entry to double entry. And mention any 2 differences between statement of affairs and the balance sheet. See, balance sheet will be prepared to know the financial position of the company, and it is prepared under double entry system. And statement of affairs will be prepared under single entry system, and it is prepared to ascertain the capital. Will not come to know any financial position. And another one difference we can say, statement of affairs will be prepared on the basis of physical inspection and items, but balance sheet will be prepared only from the balances of ledger accounts. So 5 marks questions, we have certain 5 marks questions. What are the difference between single entry system, advantages of single entry system, disadvantages of single entry system, which I already told you, and difference between single entry system and double entry system, we have 8 different differences. One is aspects. Under double entry system will enter the transaction, that is both the aspect of transaction are recorded, that is debit and credit. But in single entry, in some case both, in some case only one aspect we will enter. And accounts in double entry will prepare all personal, real, nominal will be opened, but in single entry will prepare only personal accounts and cash accounts. Trial balance, under double entry will prepare trial balance, but in single entry there is no trial balance concept at all. Then another difference between single entry and double entry is profit and loss account. Under double entry, profit and loss account is mandatory, will prepare to find out the gross profit or gross loss and net profit and net loss. But in single entry there is no such preparation of trading and profit and loss account and balance sheet. Financial position, another difference. Under double entry, balance sheet can be prepared to know the financial position, but under single entry it is not possible to know the financial position of the company, because I am not preparing the account under double entry system. Then method, double entry is called as scientific method, single entry is considered as unscientific or crude method. Reliability, under double entry we can say the accounts which you prepared are more reliable, which will be having certain monetary evidence, we can say material evidence, monetary transactions. But in single entry there won't be any proof, so it is not reliable. And last difference between single entry and double entry is utility. Double entry system of bookkeeping accounts can be used by all the type of users, but single entry can be used only from sole proprietors and partnership. It cannot be used by everyone. And statement of affairs and balance sheet, just now I told you there will be very few differences. The last question. So what are the differences between, see, if you know this 5 marks question, easily you can write 2 marks question. So what are the advantages? I told you there are very few advantages. What are the disadvantages? We had so many disadvantages which I explained in detail in 2 marks question. You can find it. And distinguish single entry and double entry. So there are 8 differences, just now I have explained. And what are the objectives of conversion of single entry system into double entry system? So single entry system and double entry system advantages are around 7. I may tell you the first one, to find out the correct profit, to find out the true and fair financial position of the business, to make accounting idle and reliable, to make accuracy of accounting records, to make meaningful analysis of financial statements, to enable taking effective steps for improving of financial position, and to enjoy all the benefits which double entry system of bookkeeping provides. This is one which comes under the objective of converting from single entry to double entry. And the difference between statement of affairs and balance sheet I already told you, again I will repeat. Statement of affairs is prepared on basis of single entry system, and balance sheet is prepared on double entry system of bookkeeping. Under statement of affairs, the statement of affairs are prepared to know the capital, either opening capital or closing capital, but balance sheet is prepared to know the financial position of a business for a particular period. And third difference, the statement of affairs is prepared on the basis of physical inspection or items, but the accounting or balance sheet under double entry system, which is prepared mainly on the basis of the balances which are taken from ledger accounts. This is about 5 marks question, and I hope this video was useful. For 12 marks or for section C, you may get majorly very few questions, that is advantages and disadvantages of single entry system and the difference between single entry system and double entry system, and one more question, that is from chapter 1, that's about the difference between hire purchase system and purchase or agreement to sale. So these are the 3 important questions which you may get it for section C. I hope this video was useful. Thank you and all the best for your exams.